Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the craziness that happens inside big companies. And today we're diving into Brady Corporation's latest financial report. Their numbers for the 3 months ending the 31st of October 2025 are in, and let's just say there is a lot to unpack, especially when you consider they just bought another company. First off, let's get a lay of the land. Brady makes all sorts of identification and safety products, from labels and signs to safety equipment. They operate in two main regions, the Americas and Asia, and then Europe and Australia. This report is like their quarterly checkup, giving us a peek under the hood to see how they're doing. Alright, let's jump straight into the big picture on their balance sheet. As of the 31st of October 2025, Brady had total assets of about $1.8 billion. On the other side of the ledger, their liabilities, meaning what they owe, were about $550 million. This leaves them with over $1.2 billion in stockholders' equity, which is basically the owner's stake in the company. That is a pretty solid financial foundation. $7,253 and $7,876, respectively, looking at their current assets, which are things they can turn into cash relatively quickly. Accounts receivable, which is money owed to them by customers, stood at $248 million. Now, they've set aside about $7.2 million as an allowance for any customers who might not pay. This is pretty normal practice. And the number even went down a bit from where it was in July, which could mean they're collecting money from customers more efficiently. Inventories are sitting at around $215 million. This is the value of the products they have on hand to sell. It increased from July, which could mean they're stocking up for future sales, or perhaps some items are just moving a little slower than expected. Now, this next number, goodwill, can be a bit tricky. It is currently sitting at $681 million. Goodwill usually comes into play when a company buys another company for more than the fair value of its individual assets. It is essentially the premium paid for things like brand reputation or synergies. A big chunk of this goodwill likely comes from past acquisitions, and it is always worth keeping an eye on how it performs over time. If the acquired businesses don't perform as expected, this goodwill could be written down, which would hurt their profits. Accounts payable on the liabilities side, accounts payable, which is money they owe to their suppliers, is about $103 million. This is quite a bit lower than last year, which could indicate they're paying their bills faster. Their long-term debt is about $115 million. This has gone up from July, which is something to note, but it is not an alarming amount compared to their overall assets and equity. Now let's talk about sales, the lifeblood of any business. For the 3 months ending the 31st of October 2025, Brady reported net sales of $405 million. This is a nice increase from the $377 million they made in the same period last year. That is about a 7.5% jump. Their gross margin, which is what is left after they pay for the cost of making their products, was $208 million. This is an increase of over 10% from the previous year. Even better, their gross margin as a percentage of sales actually went up to 51.5% from 50.3%. This is a really positive sign, meaning they're selling their products at a better price relative to their cost, and it is helping them make more money. The company says this improvement is partly due to eliminating a one-time charge from last year, and also from selling more of their higher margin products. They spent $23 million on research and development, which is about 6% of their sales. This is an increase from last year, showing they are investing in new products, especially in things like microfluidic technologies and engraving systems, likely tied to their recent acquisitions. That commitment to innovation is crucial for long-term growth. Selling, general and administrative expenses, or SG&A, which covers things like marketing, salaries, and office costs, was $117 million. While this number went up from last year, it actually went down as a percentage of sales, falling to 29% from nearly 30%. This suggests they're becoming more efficient in how they manage these costs relative to their sales. All of this led to an operating income of nearly $68 million. That is a solid increase of over 15% compared to the same period last year. This shows the company is effectively controlling its costs and growing its core business. For basic, and when we get down to the bottom line, net income was $53.9 million. On a per share basis for their class of stock, that is $1.14 on a basic calculation and $1.13 on a diluted basis. This shows a good jump from last year's earnings per share. Foreign currency translation adjustments now. There is also something called other comprehensive income, which is a bit more technical. For Brady, this includes things like changes in the value of foreign currency and adjustments related to cash flow hedges in this quarter. They had a positive impact from foreign currency translation of over $4.7 million. meaning the value of their foreign assets increased due to exchange rates. Let's circle back to another point on the balance sheet, inventories. The $215 million is made up of finished products, work in process, and raw materials. The finished products are the biggest piece at over $114 million. Again, the fact that inventories grew is something to keep an eye on, but it is not a major red flag on its own. Their intangible assets, which are things like patents and customer lists that can't be physically touched, are listed at $114 million. A significant portion of this is from customer relationships valued at nearly $96 million. The big change here is an increase in the gross carrying amount of these intangibles due to the acquisition of Mecco Partners LLC, or Mecco, which we'll talk about more in a bit. They also recorded over $7.6 million in trade names that are not currently being amortized, meaning they're not expensing their value over time yet. On the cash flow statement, which tracks where money is coming in and going out, their investing activities show a large outflow. They spent $17.4 million on the acquisition of businesses, net of cash acquired, and another chunk on capital expenditures, which is buying equipment and property. This clearly shows they are actively pursuing growth through buying other companies. Speaking of acquisitions, on the 4th of August 2025, Brady bought Mecco. This company specializes in industrial marking and identification systems. Brady says this acquisition helps them expand their direct part marking solutions, which is a smart move to round out their product offerings. The purchase price was about $19 million, with a portion held back as security. The initial accounting for this Mecco purchase shows about $3.4 million in goodwill, along with $14 million in intangible assets. This acquisition is being grouped into their Americas and Asia segment. They believe this deal is not material enough to warrant full pro forma financial statements, meaning its impact on the overall big picture isn't huge, but it is still a strategic step. Looking back at their cash flow from operations, it was $33.4 million for the 3 months, ended the 31st of October 2025. This is an increase of about $10 million from the same period last year. This improvement is good news, directly supporting their ability to fund their investments and ongoing operations. Proceeds from borrowing on credit agreement in their financing activities, which deals with debt and equity. They had net cash provided by financing of about $2.6 million. This is a shift from last year when they actually had a net outflow of almost $18.3 million. This current quarter saw them borrowing more on their credit line, which added cash, unlike last year where debt repayments were higher. They have a credit agreement that, as of the 31st of October 2025, had $115.9 million outstanding. They have substantial capacity to borrow more if needed, with over $182 million readily available and the option to increase that even further. This gives them a lot of flexibility. Let's look at how their different segments are doing. The Americas and Asia segment is their powerhouse, generating almost $60 million in segment profit. This segment's profit as a percentage of its sales is a very healthy 22.3%. The Europe and Australia segment is smaller, bringing in about $18.7 million in profit, with a profit margin of 13.7%. While this margin is lower than the Americas and Asia segment, it has improved significantly from last year. When they talk about organic sales growth, it means growth excluding the impact of acquisitions, currency fluctuations, or sales from divested businesses. The Americas and Asia segment saw a respectable 4.7% organic sales growth. Asia specifically saw an impressive 12% organic sales growth. However, Europe and Australia experienced a slight organic sales decline of 0.8%, which they attribute to weaker sales in certain product lines like people, identification, and safety. Now, no financial report is complete without a look at the risks. Brady wisely points out that increased raw material costs and supply chain disruptions, including those from tariffs, are a key concern. They also flag decreased demand for their products, competition, and difficulties in protecting themselves from cyber threats. Foreign currency fluctuations and changes in tax laws are also on their radar. It is good to see they're thinking about these things, but these are real challenges. On the shareholder side, they've been actively buying back their own stock. They have about $82.9 million remaining under their share repurchase program. This is a way for companies to return value to shareholders by reducing the number of outstanding shares. So, what is the verdict on Brady Corporation? On the positive side, their sales are growing, and their gross margins are improving, which is a fantastic combination. They're also investing in research and development and strategically acquiring companies to expand their product lines. Their financial position looks strong, with good liquidity and manageable debt. However, the slight organic sales decline in Europe and Australia is a point to watch, and the ongoing risks from global economic conditions, tariffs, and supply chain issues are real headwinds they'll need to navigate. The increasing goodwill on their balance sheet also warrants attention. as its value depends on the success of past acquisitions. Overall, Brady seems to be on a solid growth trajectory, fueled by both organic improvements and strategic acquisitions like Mecco. They are demonstrating a good ability to manage costs and improve profitability. They are well positioned to continue growing, but they need to keep a close eye on those international markets and those ever-present macroeconomic challenges. And that is our deep dive into Brady Corporation's latest financial report. What do you think about their strategy and their numbers? Let us know in the comments below if you found this breakdown helpful. Please give this video a like and subscribe for more corporate insights. And don't forget to join our Discord community, linked in the description, for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.